Hey, it's Bryan Schmidt over at Cross Country Mortgage. I hope you had a great weekend. I wanted to share some information with you about income. I get questions all the time about what income does a mortgage lender have to use to approve a borrower for a loan. So there's a bunch of misinformation out there about this, so I wanted to clarify this. So what we use is your gross pre-tax monthly income. It's what you earn before the government taxes you, before you take any deductions, before you take, health insurance or 401k or what have you out of your earned income. So if you earn $5,000 a month before tax, that $5,000 a month is what we use for the approval for you. Now, it doesn't matter if you are W-2, if you're 1099, if you're self-employed, it does not matter. There's different ways that we have to use for each of those different types of income to calculate what that number is, but for all income types, it has to be your gross pre-tax monthly income. Now, if you're self-employed, a lot of people think that, well, I pay myself a W-2 as a self-employed business owner. It doesn't matter. For us, we have to look at all of your income, and if you own 25% or more of a business, you're considered self-employed. So you could pay yourself $1 million a year in W-2 income if your tax returns and all the other documentation we need as a self-employed borrower effectively show losses and deductions that we have to count against that $1 million W-2 income. Well, all of a sudden now you don't make $1 million anymore. So self-employed borrowers, it's completely different for an approval on your income versus a W-2 wage earner or even a 1099 individual who's self-employed but is what we call a sole proprietor. So basically somebody that works for themselves and doesn't have a separate business. Now, one thing that I want to make sure we're super clear about, we need a 2-year history of your work history. It does not mean that you have to have worked for the last 2 years. What does that mean? Well, let's say you just graduated from college in June of last year and you've only been working for 8 months. Well, with your school transcripts and your diploma, we can easily document that. So even if you've only been working for 8 months, you can be approved for a mortgage. And as a matter of fact, if you've only been working for 30 days, you can be approved for a mortgage in that example if we have your transcripts and your diploma. Even if you didn't graduate and you were in school, we can still be approved using that. There's lots and lots and lots of different nuances with approving income, but what I want you to understand is it depends on your gross pre-tax monthly income. It also depends on the individual loan officer you're working with to help you understand what that looks like, and not every loan officer is created equal. So if you'd like us to help you understand what income you earn and what you can be approved for, let us know. You can call us at 847-603-4778.